then also, it's okay if you don't have a microphone. It's just as long as you can hear and see us on your end. We are going to record
question.
so that if you want to go back and watch it, you can.
Can I ask a question? On the view, we have to keep it in gallery. We don't put it on just speaker.
You do not need to keep it on gallery view. If everybody else's video is distracting to you, you can adjust your view to select side-by-side speaker. And then
how will that affect the screenshot though?
It will not. It will not on our end.
Okay, thank you.
That's a great question, Carolyn. Thank you. Yes, we'll mute them all on our end, on the back end. Okay, let's get rolling. So I'm really excited to be able to introduce Ron Camrata. He recently joined the Louisiana Department of Insurance after serving 33 years in the insurance industry. In executive positions at the Hartford Insurance Group, he was responsible for operations in 8 wholly owned subsidiary companies across the globe. At American International Group, he was on the executive team that established the first direct marketing company for insurance products in the European Union. His diverse and broad range of experience is contributing to the department's strategic initiative of providing the highest level of support to the citizens of Louisiana. Educated in history and international affairs at the University of Connecticut and Louisiana State University, Ron is an avid reader, is busy with a research project on the Vietnam War, and lives in Baton Rouge with his wife of 33 years. Thank you, Ron, for being here, and hope y'all enjoy it.
Good morning, everyone. Can everyone see me okay?
Yes.
Thank you, Amy.
Yes, we're here.
And appreciate the help we've gotten from everyone at the Department of Realtors Association. And of course, we have to mention the Real Estate Commission. They've been helpful. Let's see. So what we're going to talk about today, I know it's not the most riveting subject we could have on a Wednesday morning, but it's highly relevant. And this session I've been taking around the state, mostly to the southern parishes, because there's a real need for people to have a better understanding of their policies. And frankly, they don't. The number one problem, not only in Louisiana, but nationwide, is people tend not to read their policy. And I won't ask for a show of hands from all of you, but ask yourself, when was the last time you read your policy or even looked at it? But, and as Amy mentioned, yes, today is June 1st, the official start of hurricane season. And I guess Mother Nature has a sense of humor because she sent us the first, it may not hit us, but it's certainly on the radar and it's in our neighborhood. Now, this brings up one of the very important points I want to make to everyone and make sure you understand. For an insurance policy, you can make amendments to it throughout the term. If you make an improvement to your house and you want to add coverage or raise the limits on the coverage, you can do that. But if there is a named storm in the Gulf of Mexico, insurance companies will not amend your policy. They won't touch it. They won't write new business and they won't amend existing policies. And that's becoming more and more of an issue as life goes on here. So that's point number one. Now, being the Department of Insurance, we have a lot of statistics. And I went back and looked at all the data from Hurricane Ida, which, by the way, is still coming in a little bit. But so far, between paid claims and reserves, Ida's cost $12.1 billion. And that's just through the end of March. 458,000 plus claims have been filed, and a good portion of them have been paid. So 8.5 billion has been paid out. They're holding reserves up to 12.1 billion. That's just one storm. To give you a more specific example, Jefferson Parish was one of the hardest hit. They have approximately 195,000 residential properties in the parish. 50% were damaged. Half, every other home, every other property was damaged. So it's going to be an interesting season. Amy, I'm not working. Here we go.
I gotta tap it.
I'm sorry, folks. We got a technical problem. By the way, if you have questions, please enter them in the chat box. I can't field questions from so many people, so we're going to collect them. I will respond to every single question, and everyone who's attending will get a copy of that. So the basic disclaimer is, yes, I'm a professional. I'm here from this representing the department, and everything I tell you is gospel, but if you really have an issue, always consult a lawyer. Okay, so what are the objectives for today? First of all, I want you to know we exist. I mean, the Department of Insurance has a lot to offer people, especially folks in your position, but it's a big mystery. People don't know that we have such things. So hopefully I'm going to introduce to you some of what you can get from our website and from our department, and you can share that as you go along. So know we exist. The next biggest thing, of course, is to know your policy. And that's what I want to do, because not only are you realtors, you're homeowners. So you're going to hear things today that you really should know. As Amy mentioned, we all know you're trusted advisors to your people. We want to give you more information, give you more skills, but also for you to have the wisdom to know how to use it. Insurance, as applied to real estate, kind of gets tucked under or tucked into the process, becomes a line item at settlement. And I would like to encourage everyone to encourage your customers to spend more time on not only buying insurance, but selecting who they're buying it from, and encourage them to just pay much more attention to it right up front. So that's one of my desires anyway. And of course, hurricane awareness. Now, I'm from snow and ice in New England. I've only been in Louisiana a year and a half. I've grown quite accustomed to sun, heat, and water. And in the last 6 months that I've been with the department, I've been out in the field a lot, talking to people, and this is important stuff. I was in St. Bernard the day after the tornado went through, and one poor lady came to me. Her house was completely level. It was just a pile of lumber, and she had a paper in her hand. She built the house on her own with her father's help, and she had a builder's mortgage. She said, well, we're going to get ready to settle on April 1st. This was March 27th. The house was destroyed. Her builder's note was coming due. Her insurance was expired, and she was not at all prepared for settlement. It ended better, but it was a horrible story to hear. And our resources, we want to understand what we have. So here's what we're going to go through today. A little bit on objectives, an overview of the department, and that's the really boring stuff, but there's, again, as background, there's some things I think you should know. The mission of the organization itself, policy structure. It's, if you take out all of the legal language, because as you know, insurance policy is contract. It's a legally binding contract between two parties, the insurance company and the insurer. And when you get lawyers involved, you have legal language. So if you take that aside, there's a great deal in the policy that you can look at and understand. You don't have to be afraid of that or be an attorney to comprehend. And I'm going to point out the important sections. If you do nothing else, these are the sections you go to. All right, this is the department. Right in the middle is our head coach, James Donlin. The commissioner is an elected position, and he's coming up to the end of his second term. He'll be up for re-election November 23. And I will say that he is a highly motivated and driven individual. And he has a very delicate job, which I'm going to get into in a moment. But around him are the key divisions. And this is where I'm at in consumer advocacy. Our role is to be out there with the people and just doing what we're doing, making people aware, giving them help, pointing them in the right direction, that sort of thing. Some other important areas, property and casualty. Financial solvency is the biggest one. I'm going to say that. But one thing you should know is that everything in the insurance industry in Louisiana comes through our office. Everything from new rates, new products, new companies, all the way down to the font and print size of notices within the policy. We look at everything. Their forms, marketing conduct. We do surveys of that every quarter. So everything comes through our office in one way or another. And that may just go to allay some fears that, you know, the big old mean insurance company is beating up on me and I don't have a chance. So here are some of the things that we have available on our website. And Amy and I spoke about this earlier. We're going to put this in such a way that each one of these is a link and you can get to the specific screen on our website. So as an agent, you can go out and look for insurance companies or insurance agents, and you get a background on them. You'll get baseline stuff like who are they licensed to sell for? Have they had any actions against them, any complaints, any actions from our department? You can look at rate and form filings. It's a good way to see if there are any, if you have a customer that's going with company X, you can see if they have a new rate filing in process. Now, when rates are filed, by the way, everyone blanches when new rates come out, but that process began probably a year and a half before the date they're released. So they sound like they're new and dangerous, but it really takes a while for a new rate increase to go through the process. You can get notifications. We put out on a regular basis bulletins and announcements and just little things, but they're constant and they flow. They talk about a lot about legislature, what's happening, what's coming up, what bills are before the House, and it's just a good way to stay in touch. You can also look at complaint data. It's always entertaining. People tend to write novels when they file a complaint, and it's kind of funny. If it wasn't so sad, it'd be funny. Look at public records, fraud. We have a very powerful fraud department, and they're out there very quietly, but they're doing the investigations. They're following up on every tip that comes in about fraud. We don't let anything slip. And I'll tell you, back to complaints. For Hurricane Ida, we had 3,800 complaints so far, and every one of them has been resolved. Every single one. Not always to the insured's satisfaction, but they've been resolved. When someone files a complaint with us, the clock starts ticking. So the next morning, at the latest, the notice is on the desk of the head of whatever department in the insurance company, and they have a fixed time to respond back to us, not to the insured, to us, with an explanation of why are they complaining about this? Tell me why we shouldn't, penalize you. And then it's a back and forth to get things resolved, but they're always resolved. They either settle, we support the company's position, or we support the facts support the company or the insured, but in one form or another, they get resolved. The last resort for complaints is we had a program for mediation for Storm Ida. If your insurance company agrees to it, you get in, both parties get in the room with an arbiter and you hash it out. The last course, of course, is to go to an attorney. And there's another, you can look at down here, past bulletins, directives, and regulations. You know, the entire insurance code for Louisiana is available online to everyone. Not exactly light entertainment, but it's, you know, it's there and you can look things up. So my point is this stuff exists. No one's keeping it secret. That's our lovely building, the gorgeous building. So here's what are the most requested that we've seen. File a complaint. Everyone files a complaint, whether it's valid or not. And it's not a bad thing to do because it gets the attention of the company. You can get an insurance checkup to an insurance checkup tool, which put in some information for homeowner or auto, and it helps guide you through the process. It won't make recommendations for you, but it'll at least show you where you may have some shortcomings. I'm sorry. If you file a complaint, you go back and check the complaint status. We also support Medicare, and we have a whole department that does that. And you can get you can do appeals, and you can get find help for that from our site. And you can just basically shop. You can come to us and shop for auto and home comparison guides that are, you know, we're not selling anything. So we're trying to give you the most exact, objective information for you to make that decision. So here's a long text, but basically the Department of Insurance exists to do two things. Number one, protect the consumers of Louisiana. That's our number one goal. And we're the right arm of that mission. The other is to keep a healthy and vital insurance market in the state. And this is where Mr. Donlan's job becomes really, really difficult. Insurance is a business. Businesses have a right to make money. I've seen, not just in Louisiana, but over the years, I've seen a huge movement toward just an appearance of entitlement, that insurance is something that's going to be there. Everyone should have it. I should have it. Why am I not covered? And that's when I mentioned earlier about in a home settlement, the insurance kind of getting tucked in as a line item. They got to pay attention to that. I think it's really important. They've got to make the decision that they're with the right company, they have the right coverage for the right value of the home. And, you know, you spend that time up front, and I think it pays off for them in the long run. Now, the commissioner also carries a very big stick, a regulatory stick, and he has the power. And I'm going to give you two examples. During the Hurricane Ida, there was a lot of talk about should we declare an emergency. And the storm was moving really fast. And imagine trying to get 15 parishes, the governments from those parishes, the commissioner and the governor, all on the same page at the same time to say, yes, let's declare an emergency and order an evacuation. It didn't happen, it couldn't happen. Our commissioner said, get out. He declared. He took it upon himself to say, get out and your insurance companies are going to pay. There's a, and we'll get to this too, there's an element of the policy called additional living expenses. So if your house is damaged, you can't live there, policies will pay some money. If the state declares an evacuation, same thing, but it goes for a lot longer and could be a lot more money. So he took it upon himself to protect the people and told them to get out. Most insurers paid without arguing. A couple groused about it, and one has us in court to settle the issue. And that's fine. That's how the process works. He did what he had to do to protect the people. It was challenged, and now the courts are going to decide who was right and how we're going to do it going forward. But I think he did the right thing. The other story is that since Ida, 4 insurance companies in the state have been put into receivership by Mr. Donald. And believe it or not, that gets to my other slide about financial solvency. We have a group of about 20 people, and they are constantly looking at numbers. Every number that can be generated within the insurance industry, and they're wide and varied, but especially the financial data, just to see if there are indications that the company is moving in the wrong direction financially. And in the case of Americas, State National, the most recent was Lighthouse. And I can't remember the last one. I can't remember, sorry. But the 4 companies were put into receivership by the commissioner. And some years ago, the state created an organization called the Guarantee Fund, the Louisiana Insurance Guarantee Association. And that's the insurer of last resort in Louisiana. But what they did is, well, 2 things. Let's take Americas, for example, or FedNat. The commissioner found other companies to take some of those policies on the date they declared insolvency. And that helped. So we moved them out, stayed within the market, and moved those policies to a different insurer. I'm sorry?
Access.
That's it. Thank you.
Thank you.
Let's see, where was I? So, and then what wasn't taken was sent to LIGA, and the Guarantee Association will continue to manage those policies and renew them, but it's the last resort. By law, their premiums are 10% higher than the market, but they're constantly looking to place those back out in the in the general marketplace. They're not to be an insurer for all time. They're there to be the holding tank as we roll these policies back out. So the good news is that even though these companies went insolvent, claims are still going to be honored, policies are still valid, and eventually everything is going to settle down, but it's going to take time. You can't take 46,000 policies from Lighthouse, move them to LIGA, pay claims, and do service overnight. So that's underway. Why might it go there?
You have to just like roll the mouse over in the PowerPoint so they'll run.
So the policy structure, we're going to, the main sections, still not. Well, this is when you attend the first class. This is what happens.
Where are we?
That's it. That's good.
Okay. Is it working?
I'll just.
Okay.
Okay. I'm just going to go briefly through this. These are the different departments. Public affairs. Obviously, they send out all the notices. They take care of the commissioner's schedule, work with the media, and get the word out to places. Property and casualty, as I mentioned earlier, we review everything. So property and casualty looks at rate filings. And when they do a rate filing, they have to submit a ton of information, actuarial information. They have to justify that the rate is valid, that it's based on the original product filed and sold. They have to present information that says, we've underpriced this, we're losing money, we need a rate increase. It's not automatic and it's not gratuitous. It's a very structured process. Here's just a quick story from my history. There was a company I worked for, American International. In Pennsylvania, they couldn't get a rate increase they wanted for automobile insurance. So what they did is they created a new company filed a new set of rates as a new company, got the rate increase, and then started placing business with that company. They did that, believe it or not, they did that 16 times. And what they did in their administration system, they created tiers. So they have a scoring system that said, here's the rate, but now we're going to put a score on it, and that's going to place it in the higher rates. Anyway, but we look at everything: policy forms, how they're marketing the products. We do everything we can to protect people from fraud in all its forms. And fraud could be as simple as mislabeling something or not describing it in a clear enough language. So it's pretty complex. Consumer Services is a group that takes all the complaints for both life, health, property, casualty. We talked about fraud. They really, and this is a sad story, but the first day I joined the company or the department, there was a big plaque in the lobby. It had, two people, a man and a woman, and it was in real small print, so I didn't get to read it until later on. But quite a few years ago, maybe 6 years ago, there was an agency that had gotten into trouble, financial trouble, really bad. And they sent two fraud agents to close them down, and so they went into the agent's office, talked with him for a few minutes. He excused himself, went in the back room, came out with a shotgun and killed both of the agents, and then killed himself. That's not an everyday occurrence, but it happened. Yes, you're in Baton Rouge. So that's fraud. Here's financial insolvency. That's I'm going to leave that out there for a minute so you can read it, but that's they're doing the real work behind supporting the public. Licensing doesn't get much ink. They manage licenses. That's, you're either licensed or you're not. And they do the renewals, of course. It's more than that. And we have a legal department, which is busy. And health and annuity is such a nightmare. I bless those people because they're constantly busy on the phones. So the policy structure. Most companies, I mean, they can vary within very narrow parameters, but every policy is going to have a declaration page. And I wish I had a nickel for every time someone was waving, said, I've got my policy, can you help? And they show me their deck page. The deck page is not a policy, it's a summary. It's key points, it's very important. If you have nothing else, it's good to have that, but it's not your policy. It tells you what the limits are, perhaps, but it doesn't tell you how you're going to get paid or what that means. So don't make that mistake. There's notices galore. Our department's responsible for just about every notice that's in there. We put disclaimers, we put warnings, we put excerpts from statutes, and they're all labeled, they're all in bold print, and they're all in there for your protection. They should not be ignored. And there's privacy notices on top of that. Then you have the policy section. That's the bulk of it, and that's where a lot of the legal language is held. And but again, we don't expect anyone to fully understand that, but we do expect you to look at it, make notes, and ask questions. I mean, question everything. Remember the old phrase, question authority? Well, this is another example. I mean, and here's another thing I want everyone to understand as homeowners and realtors. The insurance company and the agent work for you. All right, you don't have to go there meekly and say, oh, could you please? No, they work for you. You have a right. You have a right. Oh, hey, it's working. You have a right to everything they hold on you. If you have a claim in process, you have a right to get every scrap of paper the adjuster, the agent, the desk adjuster, the company hold on that claim. They can't keep anything from you. And you'll get every excuse, but demand it. Just stand tall and demand what is rightfully yours. We have something on our website, which I'm going to send. It's called the Policyholders Bill of Rights. And it just goes through some very logical, very straightforward things that you should know. And that's one of them. You know, they're there to serve you, not the other way around. So let's see, licensing, health. Sections 1, 2, and 3 are the big ones. And then there's endorsements that are changes made to the policy by either the company or by us. This is an example of what notices look like. I put a couple in here, but these were actually taken from a policy. So if you look at the top, it says right here, homeowners insurance disclosure summary. And this LSARS is the statute. If you've had free time and wanted to go look that up and read it, you can, certainly can. But that's an example. Then this next paragraph saying this is only a summary of your coverage, and so on and so on and so on. But that's an example of what you'll see in a policy from us. This is an example of the declaration page, and to just run down briefly, it really is a summary. Starting from the top, it'll tell you who the insurance company is. There's an identification here, the date, the effective date. There's mortgage information, policy number, named insured, agent, and so on and so on and so on. It goes all the way down. Here are the limits that are covered, and here's the total premium down here. And then there's other information on deductibles, but that's only a summary. And by the way, a declaration page, I've seen 15 pages long because of notices and other things that go with it. So it's a misnomer to say it's a single page. This is another example of something you'll find within the policy. This is in the disclosures and in the notices, but this is telling you how we settle. This is the insurance company speaking to you. This is how we settle a covered loss for claims. And it'll have some information, your property losses, dwelling and structures, roof materials, and so on. And over here, the settlement terms. And these two terms, actual cash value and replacement costs, are very important. They can end up costing you a lot of money if you don't understand this. Actual cash value means they will calculate what they're going to pay for a covered peril on your property, and then deduct they'll take your deductible out, of course, but also apply depreciation to that. Simple example. The simple example is you have a 30-year guaranteed roof that's 15 years old. Storm comes, you're not going to get the full price of replacement. It's going to be depreciated. So they're not going to pay for a new roof that's half his life is gone. Replacement costs means just that. They're going to pay the full price. Now, given the times we live in, that means that it's the price of materials of like, kind, and quality on the day of the loss is filed. Okay, let me do that again. Replacement costs means that they will, and even for actual cash value, they use materials of like, kind, and quality. So the only example I can think of there is it's an older home. The roof needs to be replaced. Half the roof needs to be replaced. And the company that made the roofing shingles went out of business 40 years ago. And they can't find the exact color. The company's only required to provide like, kind, and quality. Okay, so where was I? Replacement costs and actual cash value. Replacement cost will be the actual, or what it costs on the day the claim is filed. What's been happening this past year is the cost of materials and labor has been changing almost hourly, and companies are not committing to anything more than like a 24-hour period. So that's, unfortunately, we're all caught in that, but that's where you can get hurt if you're not aware. And for those of you who are going to join me this afternoon, the claims process, we'll talk a little bit more about But that's where you can find it. So those are two important clauses to make sure you look at. And the last thing with replacement costs, if it costs $10,000 to replace the roof, you have replacement costs. They may not give you the whole 10,000. They may give you, they'll still calculate the depreciation. They'll give you the bulk of the money. They're going to pay you the rest when the roof is done. I mean, as strange as it may sound, people have taken claims money and not fixed their homes. It's happening. Okay. Other important points, and these are, I should put gold stars next to this stuff because these are the kind of things that make a difference and you really want to know. But additional coverage options, fraud's not a big deal. This one is big. Building ordinance or law. Unless you have the endorsement that says building code or however they word it, government action is covered. Take that same house, 40-year-old house, storm damage. They have to, in order to repair the home, they have to rewire the house or they have to change the plumbing. Anything that they have to do to bring it up to building code, current building code, if you don't have this endorsement, it's going to come out of your pocket. Let's do that again. So that 80-year-old house that was damaged, and during the course of the adjustment or repairs, they found out rewiring was needed, plumbing was needed. I don't know what else. Or they were using the wrong kind of wood for the studs. If they didn't have that endorsement, anything that, all of the costs required to bring it up to code would be borne by the insured. And it's not a very expensive, like $15 in this case. This is an actual policy, by the way.
Now, does that vary?
Yeah, I mean, it's an endorsement, so every company prices it the way they want to price it. But it's almost universal that building code is an endorsement. You know, some policies have it as part of the policy, they price for it. Others leave it as an endorsement.
Okay, Ron, here's a question. Are companies required to explain replacement cost? She recently heard from one of my wood destroyed asset providers that he sustained a loss to his shop and his tools were not covered in full. I explained replacement cost, and he had not heard of that option.
I'm sorry, his tools were?
It says, I recently heard from one of my wood destroyed asset providers that he sustained a loss to his shop and his tools, etc., were not covered in full. So the question was, are companies required to explain replacement costs?
There's two answers to that question. One, if I heard you correctly, if his shop was damaged and tools were damaged or lost.
Are they required to explain replacement
Well, tools are covered by an inland marine policy. That sounds almost like a commercial, or if it's his own personal tools.
Yeah.
Personal tools would be covered under contents. And so that's covered under contents. It's a blanket amount. It's a percentage of the limit on your property. So if you have a $500,000 house, you know, your contents, and contents are everything inside. If you took the roof off and then shook the house out on the street, everything that falls out are contents. Okay, but there's a limit on that. Like if it's 500, calculation, say you've got $120,000 in contents, that would come out of that. Now, the other part of the question is actual cash value and replacement cost are explained by law in the policy and with examples. So it's in the policy. I'm going to take a break here because I wanted to do something. This is the first class, but this is the first in a series of classes we're going to do. And I have with me Sonia Sheffield from Smart Home America. Now, there's something that's percolating in the marketplace. I keep telling her, you know, it's taken them 8 years to become an overnight success. But you're going to hear things like resilient construction, fortified building. What Smart Home America is doing in conjunction with the Insurance Institute for Business and Home Safety is promoting building codes that are far more resilient to storms. And the success is just off the charts. The simple thing, and I think they're simple, but what they can do to a roof and a home, either during a repair or retrofitting, can make that house withstand remarkable. So I'm going to remarkable conditions. So I'm going to ask her to come. I asked her to come in and join us and just do like a 10-minute exciting scenes from next week kind of glimpse for you. And we're going to incorporate her into another class we do later on. So Sonia Chetfield with Smart Home America, she's their director of technical outreach, and she's going to join us.
Thank you so much, Ron. Let me get my show started here. Let's see. Good morning, everybody.
Good morning, Sonia.
Good morning.
Okay. Make sure I've got the right thing.
I think we're caught in another glitch. Amy just ran out of the room screen. Here we go.
Okay, can everybody see my slideshow? It should say Beyond Code Construction Benefits.
Yes.
Excellent. Okay. Okay. Well, I am here to talk to you about what Ron just introduced, this fortified program. So let me give you a little bit of background, explain why it's so important. Let's see. So first, we're going to talk about what is a building code. A building code is a collection of regulations adopted by a city or municipality to govern how buildings are constructed. So the most important part of this is these are the rules that are set out. A building code is always the minimum code. It is the minimum of what your building can legally be built to. So I want that to be very clear when people say, well, it's built to code. Well, that's the minimum. That's the bare essential of what's legal. And your building code only works as well as it is enforced. So a lot of areas, they don't have enough people to enforce the code. So what happens if there is a code, but it's not enforced? Well, you know, a lot of things are let slide. So building codes absolutely work when they are enforced. These are houses that went through Hurricane Harvey. Hurricane Harvey was a Category 4 storm that hit the Texas coast. These houses were in Coastal Bend area, and the building codes are there and they are enforced there. So what you see is this house in the upper left that was built in 2017. That house did really well. It looks pretty complete, right? Well, just below that house is a house that was built in 2000. That house was a total loss, even though that house was built to that code. The codes get better as time goes on. So as municipalities adopt a more recent code, the houses do better for the next storm. I do want to say one thing though, even though that house was relatively intact, we still saw people who had 100% loss of property. Well, how can that possibly be? Well, it's because water came in through the roof. And the water comes in through the roof. It means it soaks the entire house. It means that it soaks all of your belongings, your furniture, your flooring, your drywall, and all of that is going to have to be taken out of the house. And it also means that whoever lives there is going to be displaced. They're not going to be able to live in the house until all of that work is done. So even though building codes work, the roof is the weakest link, and roofs are very rarely mentioned in building codes. And when they are, it's not enforced. It's hard for local officials to enforce that. So as Ron said, I'm from Smart Home America. Well, what does that mean? Well, smart home doesn't have anything to do with the Internet of Things. Our definition of a smart home is a home that is resilient, that resists the weather events that we see every day across the United States. It can resist the wind from hurricanes, from low-level tornadoes. It can resist that wind-driven rain. It can resist or survive the floods that come in. And because of all of those things, it's actually less expensive to insure. And therefore, you're more likely to have adequate insurance. You're more likely to have enough coverage. So when a disaster does happen, you have the resources to recover completely. Once all of that is in place, we love to see homes that are green, they're sustainable, so they're affordable for a longer period of time, that have good energy, so their utility bills are more affordable. And once all of those things are set up, then we love to encourage people to have a Ring camera, so they can see who's leaving packages on their door. You can wire your home up. You can have the refrigerator that makes your grocery list, and all of those fun things that we tend to associate with a smart home. So what Smart Home America did after Katrina and Ivan was try to figure out how to build back in a way that didn't repetitively have to be rebuilt every time we saw a catastrophic event. And here on the Gulf Coast, that's a hurricane. So we were looking for a way to build back so that the next time a hurricane came through, we weren't doing the exact same thing over and over. And as we looked across the country, we found IBHS, that is the Insurance Institute for Business and Home Safety. And they were absolutely doing research on the ground and in the lab that showed what things can be done to make a home or business more resilient. So IBHS is 100% funded by the insurance industry. So they are looking for ways to build a structure to withstand these events, hurricanes and low-level tornadoes that cause loss and risk of loss. So, like I said, we're based in Mobile, Alabama, and you can see Alabama has the largest number of fortified homes. We've been very active in the state to try to get insurance companies to recognize the advantage of insuring fortified homes. And because of that, we have very, very good discounts in the state. It's encouraged a lot of people to get a fortified home. We also have a grant program. So there is a third-party evaluator involved in showing that a house is fortified. That means that an insurance company is not just relying on the builder or the roofer or the homeowner to say, oh yeah, my house is fortified. There is actual proof that has been submitted and reviewed, and that house is then designated. These numbers that you see on your screen, those are from May 2nd. I don't have the June update yet. I checked this morning and they didn't have it out. And there are over 37,000 homes in the United States that are fortified. This is not a brand new program. It's been around for several years now. So you may say, okay, well, it's been around for several years. Well, how well does it work? Well, there have been several hurricanes that have hit fortified homes, and they've always done really well. But when Hurricane Sally came ashore in 2020 in Baldwin County, so that's the other side of the bay in Alabama, there were almost 17,000 homes that were in the way of this hurricane. Now, Sally was a low-level hurricane. She was a high Category 2. And that is, for all of those of us who live in hurricane areas, Category 2 doesn't worry you too much. What made Sally really dangerous was how slowly she moved. Sally moved so slowly, you could walk to your bathroom faster than Sally rolled across the land. It was so incredibly slow. People sat in the eye wall. Now, remember, we're talking about a low-level storm, but folks sat in the eye wall for 8 hours. In some cases, that's a long time to be sitting in that kind of wind. So what was the result of this? Well, 95% of homes that went through Sally that were fortified had little to no damage. And what that means is they did not have enough damage to make an insurance claim. That is an amazing number. And you also have to remember that in those 5% that had insurance claims, There were a lot of trees that came down during Sally because she moved so slowly. So if a tree falls on your house, that's going to trigger your insurance claim. Even if your roof stayed pretty much intact, you're still going to have insurance claims on that. So research alone, so this research that IBHS does on how to make a better house, particularly the roof, won't drive down these losses that we see until we turn this into a toolbox for homeowners and business owners, for consumers. You, as realtors, can help us amplify those tools and put them in the hands of homeowners and business owners so that we can have resilience in community-wide, so we can recover after these horrible storms. This is actually a house that did really well after Sally. This was a home that was existing. It was not built to the fortified standard. They re-roofed and got a fortified roof for their home, for their existing home. And this man had no damage. Everybody else in his neighborhood had damage. Most of those people were displaced from their homes. They had so much damage from the water coming into their house. This particular neighborhood is very close to the coast, right where the eye wall came through, that they all went through the eye wall for hours at a time. This is actually a house that was built fortified. This is not in Alabama. This is a home in Grand Isle, Louisiana. This house went through Ida. This is what it looked like after Ida. It had no damage. And you can see in the background, that is what a lot of Grand Isle looked like. About 60% of the structures on Grand Isle were a total loss after Hurricane Ida. So the other advantage to, and let me just give a disclaimer, these are Alabama rates. The insurance rates for a fortified home versus a not fortified home in Alabama. And we'll talk about Louisiana in just a second here. This home has a rate of $4,800 for its homeowner's insurance. That house was built before the fortified program. This home was built after the fortified program became what this particular builder did, Truland Homes. This home has a yearly insurance rate of $1,152. That's a huge difference. And the reason is, it has been shown that homes that are fortified are a better risk for insurance companies, reduces their risk. So what about Louisiana? Well, Louisiana has House Bill 451, also known as Act 30, which is effective July 1st of this year. It requires all admitted carriers to give a discount, to submit their discount to the state for fortified. Building or retrofitting, so if you have a home putting a fortified roof on, for example, to the fortified home or fortified commercial standard will qualify for a reduced rate or a discount on hazard insurance. Now, exactly what those rates are going to be has yet to be seen. It's something that's coming up, but definitely pay attention to that. It is something that will benefit everybody in the state. And lastly, I want to point out that a study was done in Alabama several years ago that looked at fortified discounts and the increase in the home value for homes that are actually designated as fortified. What they found is that on average, the home value increases by nearly 7%. Now, I will say that the closer to the coast you are, the more difficult it is to get insurance. Also, the greater that increase. The increase close to the coast in Alabama is in the double digits for increase in the value of a home and what you can sell it for. So I'm just going to wrap up by leaving my contact information up here. And I don't know if we have any time for a couple of questions, if anybody has any, but you can always reach out to me via email and I'll try to get back to you as soon as possible. Ron, do we have a minute for questions?
Well, actually, what I've asked everyone to do is to submit them through the chat feature, much like we did with the Hurricane Summit. And we'll get a list of questions and then we can answer every question and distribute it to everyone. I think
Excellent.
the easiest way to do it.
Okay, thank you so much. And I appreciate everybody's time today. And please, if you put your questions in the chat, and feel free to reach out to me via email, and have a wonderful rest of your day.
Thank you very much, Sonia. All right, I think it's time for a 10-minute break, and then we'll get back to it.
Excellent.
Want to show a we want to show a cartoon or something? There's a couple of things I'm going to add into that. More about what we do. You folks have any questions?
No, well, it's funny, of course, that you mentioned the receivership of the insurance company.
Mhm.
I'm actually dealing with that now with Lighthouse.
We're still on break, right?
I believe we are.
As far as I know, they didn't come back, and I've been sitting here
All
the whole
right,
time.
okay. Thank you.
All right. Okay. Everybody can hear audio again? Okay, just a thumbs up. Good, thank you. Thank you, Sonia, for taking time to answer some of those questions in the chat. I know that that will be helpful. We'll also compile and put this with the resources that we're putting together.
Okay, thank you, everyone. In our last episode, I just want to add a couple of things. Sonia mentioned House Bill 451. There's another piece of legislation that likely will pass. It's House Bill 612. And the state is going to offer grant money to homeowners to retrofit. And that's all I know at this point. The Department of Insurance is going to administer the program, so it's going to stay with us. And the process has yet to be defined. And I doubt this will begin to take effect for months, even once it's approved. There's a lot of things to go through. We have to get it set up administratively. And but it's, you know, if you think of all the things Sonia told us, we have the government now behind it. It's going to offer money for retrofitting. So it's kind of a kickstart to the program. We know that insurance companies are going to offer discounts. We know that the value of homes that are fortified will go up. So there's goodness here. And the other part that we'll talk about when Sonia and I come back with class number 3 is the process that builders go through to certify property. So with that said, thanks, and let's continue the journey. One other thing, we were talking about additional coverages and options, the building ordinance. The other one I want to mention that's always leaves a bad smell in your nose. Sewer and drain damage, or actually this is worded differently for this policy, but backup, storm drain backup, sanitary sewer backup, those are not covered. Those are not covered under a basic homeowner policy. And as you know, if you've sat through risk rating 2.0, neither is flood. Flood is not covered. It's just not covered, period. So people have to be reminded of that. And since we all live, I mean, Louisiana is one, even with 2.0, it's still a flood zone. I think the number was 58 out of 64 parishes have flooded at one point or another. So we love water. So for a homeowner, there are options. The HO1 is a basic dwelling policy, 4 walls and a roof. So it basically protects the building, but it's bare bones. And, you know, if you had a cabin in the woods or a retirement home and, you know, you really didn't have much contents, that could come in handy, I suppose. HO2 expands on that to include some named perils and your contents. Then you jump over here to the condominium and townhome, HO6, which is the most expensive, the most comprehensive, all the bells and whistles you can think of. You can also, there's renters policies. You can cover your liability, contents, even some physical damage. And it's a good thing to make sure renters speak with the landlord to understand what coverage they have in place. And never assume you're covered for anything. But the rock star of the homeowners policy is HO3. That's what most people have. And that it's an open peril policy, so damage is damage. It's pretty much going to cover it, subject to terms and conditions. And it's for a single dwelling. It's not an apartment building. It's not a multifamily home. And of course, liability and medical coverage. And that's the one we talk about most. So that's the guy. So the main section of the policy is section 1, property. And under section 1, there are the different letter named coverages. The dwelling is the house itself and anything that's physically connected to the house. So if you have a fence that's attached to the house, that's part of the property. That's part of the dwelling. A
Excuse
garage.
me.
attached to the-
I'm sorry to interrupt you. Do you mind screen sharing?
I'm sorry?
Do you mind screen sharing? We can't see your presentation anymore.
Oh, I'm sorry.
Thank you. And again, apologies for interrupting.
Thanks for doing that. There we go. Hold on. Is that back?
Yep.
Okay, there we go.
Yes, that's good.
Okay, thank you. So coverage A is dwelling. As I mentioned, the dwelling itself, the house, the 4 walls, roof, and anything connected. Coverage B would be any other structure. So if you have a shed, playhouse or something in the back, other structures, barn, that's where that's covered. Coverage C is all your contents. And again, that's a calculation off of the limits on the dwelling. Now, there's another part to contents. I think I have a slide here about that, but it's called scheduled personal property. If you have valuables, things that you think are valuable, jewelry, artwork, I'll talk about it. I'll talk more about it in a minute, but you can actually schedule items, and with the proper documentation, they'll pay the full amount. But I'll explain that in more detail shortly. Coverage D is loss of use, and this is where the additional living expenses comes into play. And I mentioned there's 2 flavors to that. One is a standard, my house is damaged, I can't live here. And the other is when there's a declared evacuation or emergency. This is an illustration of what I talked about earlier with the replacement cost and actual cash value. It's pretty straightforward. You have the cost to repair, the deductible, and then depreciation, and then an amount. And the difference over here is it's a recoverable depreciation. So they may give you $6,000 or $7,000, and when the work is done, they'll give you the remaining $1,000. But it's so important to make sure you understand what in your policy is subject to which. Because in this policy I showed you, the sample, they mixed and matched. Some things were replacement costs, others were actual cash value. So you have to be aware, because if
I'll take care of that, Ron, if you want to keep.
okay.
We lost power on the presentations, and while I work.
It was a
on
hurricane. The
it-
hurricane's hitting us.
What were you on the policy?
I was talking about actual cash value and replacement costs. Now, some policies offer an endorsement where you can basically buy up on like roofing materials. We talked earlier about like, kind, and quality. Some companies offer an endorsement to just raise that limit a little bit.
It's gonna take a little bit on this end.
Okay. How about somebody send me a question? Oh,
And I'll have to get back into the Zoom and everything, so. Now would be a good time to go back and see if there's any specific questions.
can I field a few questions? Wait a minute, okay. There's one here from Debbie. Is there a list on the website of reputable insurance companies? Well, we don't make recommendations. We don't endorse anyone. But all the information that you need to make a sound, intelligent decision is available to you. So that I can say for sure, but it's up to you to decide. We can't recommend anyone. Oh, the grant. Someone asked about the grant. We don't know too much right now because we know that it's been sailing through the legislature and it's going to pass. But once it passes, then we have to set up the organization and the processes that we need to administer it, get it going. And there's a lot to be worked out there. You know, how much is each grant going to be for? What are the qualifications? You know, a lot of those things. So it's going to be a while, but I will tell you that I will keep everyone I'm in contact with aware of what's happening. And through our website, there will be bulletins and notices. So I'd recommend just subscribing to the bulletins and you'll get it as soon as I do. Someone said, okay, I had USAA, they were great. I'm with USAA and I have no experience because I haven't filed a claim. How does the commission proceed when a complaint is filed? The process for a complaint is pretty simple. You can go online or you can call in and talk to someone. And it's really basic stuff. You know, name, address, insurance company, policy number, claim number, all that. And then a brief description of what's going on. And there are boxes to click, you know, is it homeowners, auto, life? What's your complaint? Is it related to claims, communication? So you make some selections. And then you write a narrative of what the complaint is. That goes immediately to an examiner. And the examiner is through our internal procedures, has to get that to the company by opening of business the next morning. So that will go to the insurance company and they're required to respond to us, the department, within 14 days with sufficient documentation to explain why the person complaining is wrong or give their side of the story, so to speak. And then it's kind of a back and forth. They may say, well, the insured didn't provide pictures or something, or documentation. And it goes back and forth a little bit and sometimes can take weeks and months to get resolved because there's delays on all ends. They can, the insurance company can request extensions and the insureds aren't always prompt to reply with what's asked for. And you know, here's another simple thing that everyone should remember. If you file a claim for something, especially contents, you have to be able to prove in some way that you had it, right? I mean, what a concept. You know, you had, I didn't know you had the Mona Lisa at your house, you know, show me some proof. So that's an important thing. I'm going to get to that this afternoon too in more detail. But anyway, that's the process, and it just goes back and forth until there's resolution. Either the claim is settled, the company's position is upheld, or the insurance position is upheld, and we close it out. Now, if an insured retains an attorney, then we're out of it altogether. The Department of Insurance can't stay involved if the insured legal counsel. So that's a big door closer for us. Let's see what else.
You knew there was a question earlier.
I'm sorry?
There was a question earlier. How many homeowners policies have been impacted by these insolvent companies, and like how many people are left without policy?
That's a great question. The answer is 0. No one's left without insurance. All right. Immediately, the insolvent company or responsibility for the policies moves over to the LIGA, L-I-G-A, the Guarantee Association. Now, it takes time to transfer all those policies over to LIGA, get them into their system, and just make the transfer, the logistics of it. I think there were 46,000 policies coming from Lighthouse, for an example, 20,000 or so from Federal National, and some of those from Fed went to other market insurers. So that was a process that went a little faster, but it still takes time. But in all cases, any outstanding claims will be honored. Any new claims will be honored. The policy will stay in force and can even be renewed if you choose. You can move your policy yourself if you choose to, because the rates from the LIGA are going to be higher by 10% than what you're paying now. So you could choose to say, well, this is bad, I'm just going to take it where I want to go. But no one's going to be left without insurance. And I think in total of the 4 companies, it may be close to 75 to 100,000 policies. Oh, we're back.
Is there anything that wasn't answered in the chat?
Oh yeah, I mean, I just bounced around, so I'm sure there's a lot of things. Okay, so we're still in, now we're in section 2, liability coverage. And this is real simple. Coverage F is the medical payment. If someone falls on, your sidewalk or trips over your kids' toys. And coverage E is liability. Now, as you'll see in a minute, you have a nice house and you buy a puppy. That puppy bites someone. If you don't have, well, wait a minute, let me back up. You have this puppy, he bites someone. Most policies restrict the breed of dog that you can own, that they'll cover. Okay, so it doesn't pay to not be forthright with insurance companies when they're looking at your property or you're taking out a new policy. If they ask you the question, do you have a dog, and you say no, and it happens to be this, Scraps over here, this whatever that monster is, and he bites someone, even though you have liability coverage, you're not going to be covered because it was not a covered peril. It was not a breed of dog that they write insurance for. So it doesn't pay to not be truthful. If you take out a policy, you don't have a dog, and then somewhere during the course of the year, you buy a dog that is not a covered dog, and he bites someone, you won't be, if you don't tell the insurance company, you won't be covered. So you have to tell these people that there are changes to your policy. And that's a rule that should be in everyone's mind anyway. If you make improvements to your house, tell your insurance company. I put in smoke detectors, I put in an alarm system, I painted. Whatever you do to a house that increases the value, you want to make sure that you have the proper coverage for that.
Ron, are there certain classes of animals that the insurance does not cover?
Oh, it didn't really go beyond dogs, but I'm sure if you had a couple of pythons in the house, they wouldn't like it. But there's no regulations other than dogs, yeah.
And then does the policy restrict any breed when it comes to original pets?
Well, I'm sure that if it was be hard to imagine a breed that they wouldn't cover that becomes a support dog, because that's kind of counterintuitive. But in all cases, just tell your agent what you're doing. You know, I've got a German Shepherd. Some insurers may find offensive, but if you tell them what you have, it's a support animal. It's trained. They're going to tell you what to do. No surprises. That's the thing.
And let's just say, like, if you had your initial insurance policy, you didn't have a pet, and like you're saying, over the course of the year, you don't got a pet. It's not that would be considered like an aggressive one, just a standard like beagle or Schnauzer or something like that. And they happen to bite somebody. If the homeowner didn't sort of report to the insurance company, would that bite be covered?
Could very well be denied, because when you remember, insurance policy is a contract, and when there comes a claim, everyone's going to go to the contract. Say, what are my responsibilities under this agreement? And the agreement's going to go down. It's going to say, here's all the things, and there's not going to be any mention of a dog, right? And on the other side, your responsibilities, it's going to say you have to maintain, you have to do this, you have to do this. So there's no value into not communicating with your insurance company. It may result in no change at all. It may result in an increase in premium, but you don't want to risk having a claim denied. And it's, since we live in Hurricane Central, you make a bunch of improvements to your property and you don't tell them about it, and you find your 20% home value is 20% above what you're covered for. It's going to cost you money and heartache that you don't need. Okay, when you take out your policy to begin with, get good, solid advice from an insurance professional. And let's assume that everyone who gets an agent has found, the paragon of all agents, and they're going to work with them. They're going to be truthful and forthcoming and all that. But they're going to advise you on what to put in your policy. And you always have to be cautious to say, let the buyer beware, but make sure it fits to what your situation is, to what the house is, and what you can afford. Risk is, this whole thing is the law of large numbers. The insurance company takes your risk because they can spread that risk over, tens of thousands of other policies and homes. You don't want risk, so that's why you get insurance. You can actually manage your risk by playing with deductibles and coverages. If I say, well, I'm doing really well, I've got money in the bank, I can take more risk. So maybe I'll have a higher deductible. That'll bring my premium down. Or maybe I don't need quite that much coverage. I'll bring my premium down. Or just conversely, you can go the other way. No, I want the insurance company to take everything. So you can manage that. But just know that the limits you choose affect the premium, and the deductibles you choose will affect the premium as well. And that in all cases, they're only going to pay up to the limit that's in the policy. Value.
How is value determined?
Well, there's no single way. I mean, if I wanted to see the value of my house, the first thing I would do is go to realtor.com, and see what houses have sold for in my neighborhood, comparables. That's the first thing. From an insurance company perspective, it's the cost to rebuild. That's what they're going to look at. I mean, that's what they're going to look at when you file a claim, when they go to renewal. If you have a mortgage on your property, you have to maintain at least 80% of the mortgaged amount. You have to maintain insurance coverage on at least 80%. Cost to build is the biggest one, and there's no straight answer for that. I think I showed this to you already.
Yes, you did.
Within the policy, and this is just to illustrate the level of detail that you'll find. This is taken from a policy. So we got the number, property details, but it'll talk about exterior wall, interior, additional details, fire protection, roof surface. Everything is, and the reason, as I just mentioned, when there's a claim, this is what they're going to look at to see what are the particulars of the home. When you buy this policy, if you don't read this stuff and it's not correct, you could get hurt. So it's important to read it for the first time when you first buy the policy to make sure it's right, to make sure you're getting the right coverage for the right price. And every renewal, you get a renewal notice 60 days before the expiration date of the policy. That gives you time not only to review the changes, because they're required by law to send within the notice what's changed in terms of the policy wording, endorsements, exclusions, premium. And it gives you the chance to look at that, make a decision. It also gives you a chance to shop around. I mean, you're all good shoppers, right? Why would you not shop your policy around to see where you can get the same coverage for less money, more coverage for the same money, or some better deal? There's in reading those complaints, I hear a lot, oh, I've been with the company 20 years, how can they do this to me? Loyalty in the insurance industry is good for a year, right? The current term of your policy. That's all you can expect. That's all you should expect. They're going to live up to their part of the bargain, and they expect you to live up to it. But this year only. Next year's a new deal. And the company, believe it or not, companies want to pay what they owe you because they're living up to their contract. But they want to pay what they owe you. They'll never pay you more, right? And if you let them, they'll pay less. Now that's kind of getting into my claims thing, but you have to be on top of everything. And this is just part of being an adult, part of owning a home. You got to be on top of this stuff, or it can cost you money. More details, but this is, again, since this is an actual section of a policy, building codes not purchased in bold print with an asterisk. They're saying, you didn't buy this. Don't come back to me in a year and file a claim for this because you did not buy it. They're making it really clear in the policy that you didn't buy that endorsement. It does have extended coverage for roof, water backup, but this is what's in your policy. It's here. It's not the easiest thing in the world to read. We fight constantly. We try to get it as simple as possible, but since we're all living under the heel of lawyers, it has to be written in such a way. This is another example of how you can understand what's in there. Dwelling A, dwelling protection coverage A, they state, here's what we will cover under A. And then they go on and explain. And then underneath it says, here's what we do not cover under A. And it's a little back and forth because it says, we'll cover this, this, and this, unless it's covered under that. And then we won't cover it. So it can be confusing, but it's just saying that if it's covered under A, we won't cover it under B. But the structure is what's important here. You'll see this in other parts of the policy. This is coverage B, same thing. A little more lengthy, but same idea. But it can, it's important reading because this is it's an example. Do not cover under coverage B, which is other structures, any structure or property covered under coverage A. Seems simple. Land is never covered. And I had one lady in a meeting a couple nights ago that was almost in tears when I told her that earthquake, sinkholes, mudslide, not that you have a mudslide in Louisiana, but none of that's covered. And she couldn't believe it. So, but I have a policy. It's awareness. There are other sections within it that are, every section, like section 1 has additional protection and conditions, same with section 2. And the policy endorsement section always gives you more of the legal definition of what that endorsement is, or changes to the existing endorsement. This is a simple example of the hurricane deductible. Now, I wish I could see a show of hands, but how many know that there's a hurricane deductible that's been applied to every homeowner policy in the state by us? It exists. It's between 1% and 5% of the home value, and the insurance companies have that variance, 1% to 5%, and it's applied. I'm getting ahead of myself, but you have your all perils deductible. Okay, that's, you know, you back into the garage door and the whole thing collapses. That's an all perils, and that's subject to your 100 or your basic deductible, and that's a set amount. A hurricane or named storm is 2 to 5% of the home value, and it's applied once per year. So January 1st, it was applied for 2022. That means the first storm that hits, if you don't meet that, what do we use here? 2%, okay, $2,000. So you have to satisfy your all perils deductible of $2,000 plus the hurricane deductible, so $4,000. If your first claim doesn't satisfy the $2,000 for the storm, so that's over and above your all peril, then the balance is applied to the next storm. All right, so say you had the hurricane, you only had $1,000 applied to the hurricane. The next storm, you had another $5,000 damage. You would satisfy that deductible and it goes away. So storms 3, 4, 5, and 7, it doesn't apply to those claims. Does that make sense? It's okay. It's painful, but this is what goes to fund the Guarantee Association. This money goes back to support all of those policies from the failed companies. Endorsements. This is what I started to talk about, scheduled personal property. If you have any of this stuff that you think is valuable, I used to travel a great deal internationally, and I would buy things from, I thought it was cool to buy stuff, mostly jewelry from other countries, bring it home when I'm a hell of a guy. But when I did, I always got a receipt, I got an appraisal, and I got a photograph from the store I bought it from. I brought that home, put it on a schedule with my insurance company, and every 2 years I would have it reappraised. Because jewelry is one of the few things I bought in my life that actually gained value. But by doing that, if that piece of jewelry was lost, stolen, or crushed, I would get that full amount because I have complete documentation. And that's what a schedule of personal property does. You can put most anything you want, as long as you can prove it and prove the value, prove that you have it, you bought it, and you have to prove the value, they'll pay that amount. So it's different from the contents coverage, which just, you know, you go up to a limit. That can be very handy. This can be very handy. Exclusion. This is actually the first thing you should read when you look at your policy. What is absolutely not covered? Because that's what's going to hurt you the most. And we talked about dog breeds, and that's particular to every company. Some don't have it, some will be very specific. If you are doing any kind of business out of your home, not that that's a bad thing, but again, if you're doing business out of your home and you don't tell them, you have damage to your house, the adjuster comes and says, wow, it looks like this guy's got a nice little setup here. He's running the company from his office. If you don't tell them, they'll exclude that from the claim. It may only be 100 square feet in a den, but if it's part of if it's damaged as part of from a storm or anything, they'll exclude it if you didn't tell them. We talked about the building code and government. The other part of this is government action. And I can't come up with a good example, but if I just can't come up with a good example right now. I'm sorry, I'll get one for you. But you know how the government can be. If they make a move and it impacts you, you may find yourself excluded. Neglect and vandalism is most often after a storm. You know, if your storm is damaged and you go to live with your relatives in Texas and don't do anything to mitigate the damage to the property, and it gets vandalized, it gets trashed and whatever else, if they can prove, or if there's evidence that there's neglect, they will try to exclude that.
For example, there was item,
Mhm.
the West Bank, it was mandatory.
Yeah.
But they couldn't get back, it was my niece in particular, she couldn't get back until almost 3-4 weeks to even, she had substantial amount of damage.
Yeah.
So in a situation like that, if there were vandalism, because she couldn't get back, so like would they kind of take that into
Well,
consideration?
I mean, that's,
Or,
you can't put every situation in a contract, but
yeah,
yes, they would. I would think most companies would be at least open-minded to hear that, and judge. If the police wouldn't allow me in to
right.
fix my home, you're pretty much out of control. What else? Earth movement mentioned. None of it's covered, and I always laugh. Well, not always, but I haven't seen one in a while. Those beautiful homes on the cliffs of California on the coast, and you watch them gently slide into the ocean. And I mean, if you build a house on a cliff or on a fault line, or what's interesting, I looked at a topographical map, and if you drew a line from Slidell over to Lake Charles, just a straight line, everything below that line is less than 3 feet above sea level. And you got to wonder how people on Grand Isle, which is like 6 inches above sea level. Anyway, I digress. Floods not covered, mold. Mold growing in the walls can be a problem. Mold from storm damage will usually be covered, but you got to mitigate. You got the standing water out, you got to cover that sort of thing. A lot of these things are a little nebulous, but the important thing in all claims, in everything here, is documentation. Photographs, notes, records of conversations, emails, anything related, hang on to, because it'll come in handy. At renewal time, this is a simple slide, but you can play with your deductible, shop it around, add safety features, the Fortify that we talked about with Sonia. And as trite as it sounds, bundling coverage helps. You can't save money if you put your auto and home in the same company. Now, before loss, now you're going to get this, but the National Association of Insurance Commissioners has put together an inventory app. And the beauty of this is that it's a pain in the neck to populate, but you can save. You can room by room. You put, living room, and you list all the items, date of purchase, how much it was, take a picture, copy a receipt, and you can store everything in one little spot. So you have a claim, you upload a file, and you're done. And then you maintain it over time. This is one of the best time-saving devices I think anyone's come up with in a long time. And it's accurate. I mean, if you keep it current, there'll be no question. If you had a tree sticking out of the side of your house and you take a picture of that, it's pretty hard to argue that there's a tree sticking out of your house. The same is true with your furnishings, your contents, or like I mentioned earlier with scheduled property, take a picture. Pictures, pictures, pictures. They're worth 5 or 6 words. So before loss, always know what's covered and more importantly, what's excluded. If you know that going in, the storm season, which began today, you're better off. Now, of course, the other side of that is if you know what's excluded and you don't take any steps to fix that, then you don't have no one else to blame. But know what's covered, what's excluded. Educate yourself on that, and by that I simply mean attending this class or just reading your policy and asking questions. Know your market value. That goes right hand in hand with reviewing your policy with an agent or a broker. And by the way, if you're not happy with your agent, find another. Right? They work for you, remember? And there's no reason you have to continue with someone you're not 100% happy with or who's not doing the job. Notify of improvements, make sure you have adequate coverage, the inventory, and please maintain your property. I've seen examples already in the last few months of people who just haven't taken care of their place. You know, the trim is falling off, or there's rotted wood. And after Ida, they came and did the adjustment, and they said, "Well, we're not paying for all of this because it's pre-existing." And they were surprised. Again, I have a policy. Why isn't it covered? So maintenance of your property is just as important. Now, as soon as you see damage on your house from the storm, call your agent, call the company, email them, do something. The sooner you file a first notice of loss, here's what happens. First notice of loss is filed. That starts the clock ticking, much like the complaint. An insurance company has a fixed amount of time to respond to their insured after filing a notice of loss. Under normal circumstances, it's 60 days. In a disaster like Ida, it's 180 days. But you get in the queue early, you're going to be first to get the adjuster out there, you're going to be first to get the process started, and you'll be ahead of the game. Always mitigate damage within reason, okay? Make what repairs you can just to protect from further damage. Don't be climbing roofs and trying to rebuild the roof or anything. Keep very accurate records of expenses, receipts, invoices, because if it were me, I'm not going to wait to get a check from the insurance company. I'm going to start doing these things right away. In many cases, if you have serious damage, you can talk to your company and say, "Look, I've got to get this covered. I can't do it myself." I've heard of them advancing money on the claim just to get that mitigation done. But get it done. Cover windows, remove trees and branches. Standing water is a big one. If you can get that out, most often you're going to need a restoration company to do that. But get on top of it, because that'll save you pain later on. Because if they say you didn't mitigate, they may disallow it. Inventory we talked about, and same receipts for the additional living expense, all that's going to be looked at hard. So make sure you stay within the rules on that. And in some cases, even the additional living expenses could be subject to your deductible. $180 days proof of loss, 180 days for catastrophic, and 60 days for all of them. Let me make sure I'm clear on that. What that means is you have to get your proof of loss in within 60 days or 180 days. Now, I don't want to talk about this. You've already been through 2.0, but this is just a reminder that flood is administered by the government, federal government. The Department of Insurance has nothing to do with it. We don't regulate it in any way. We don't administer anything. We just know it exists. But you can always go to floodsmart.gov, and there's plenty of information out there from FEMA. And this little QR code will take you right to it. This is what I talked about earlier. Loss of use, the basic loss of use, additional living, reasonable housing and living over and above what you're paying normally. None of this, basic insurance says we're going to make you whole. It doesn't say we're going to let you make a profit. So it has to be realistic. It has to be within reason. Don't go to the Savoy Hotel, go to a Motel 6. That's how they're going to look at it. But it'll cover reasonable additional costs, but know your limits and know whether or not your deductibles apply, because that may affect your decision. If it's under a civil authority, meaning an ordered evacuation or a declared emergency, it's more generous in terms of temporary housing, hotel, and transportation. They'll even do boarding for pets and other evacuation expenses. Doesn't exceed 14 days, and it is an optional. There are optional coverages that you can get. Okay, well, this is just common sense. Prepare now, review your policy, get some kind of inventory together. I can't, I hear a lot of stories of people not picking things up out of their yard, things that aren't secured, like lawn furniture or a swing set, and then they find it, sticking through their kitchen window. Stuff tends to fly in 160-mile-an-hour winds, and you can help yourself by just securing it. Keep your policy. Please keep your policy in a safe place. Know where you can get it. Have emergency numbers handy. Know who to call. Your agent, your company, fire, police, everything. Just keep it handy in one spot and keep it safe. I'm kind of getting into the claim, so I'm going to skip through this. I think, in fact, I think we're out of time. Look at that, 11:57.
Good job, Ron. Is there any other lingering questions that this particular group wants to have addressed? Okay. All right, so we will provide the recording of this session. Thank y'all for participating. We are doing the claims, ins and outs of the claims process. So some of y'all talked about explaining the hurricane deductible a little bit more and kind of going through that process. And I'm sure Rob will cover some of that in that claims process. We will start that at 1 o'clock. If you want to come back and join us for that, you're free to. You can expect to get a certificate and the reporting within a week or so. We will audit the reports of both the screenshots and what you put in chat to make sure you attended. And we will have the recording up probably by tomorrow morning. And you can find that back on our website. If you also hadn't noticed, we also put together a realtors resource as well as a consumers resource. And there's a great flow chart of what to look for and when to know if you need a flood policy and other things. And we're going to keep building out that insurance resource for you. We want to be able to help give you the information that you need, answer those questions. This will be an ongoing relationship that we have with the Louisiana Department of Insurance. And for those of you that we will see at 1 o'clock, we'll see you then. If not, everybody else, have a great rest of the day. Go close some deals. Thank you.
Thank you.
Thank you.
Thanks. Thank you, Amy. See you at 1.
See you at 1 o'clock.
Thank
Yes.
you.
All right. I can stop the recording.